All right. Hey everyone, welcome back to my channel. Today we're going to be talking about mortgage rates, and what better way to talk about mortgage rates than to talk to an expert. My expertise is real estate. So I brought in my number one expertise guy, Tom Waters. Tom, introduce yourself.
Hi, everyone. Happy to be here. I am a mortgage broker based out of Connecticut and New York. And yeah, I'm just really happy to share my knowledge on the rates, what's going on in the market, and hopefully give you guys some tips on, how to get prepared to buy your first home, second home. But yeah, thanks for having me, Deja.
No problem, no problem. Guys, Tom is my number one guy because I can literally text him, call him at any point, and he's there. Like literally on the weekends, during the day, 6 o'clock, 10 o'clock. Tom is always there. And who doesn't love that when you can text your realtor or your expertise person and they can answer right away? So that's why Tom is my number one guy. And he's smart, he gets good rates. So, Tom, question number one: what is the current mortgage rate, and do you see it rising or falling as we head towards the end of the year?
Great. Awesome. So for rates in general, I mean, obviously everything depends on your status with, how much you're putting down, your credit score, but just to give you like an average for a conventional and an FHA. Conventional, we're looking at the high fives, closer to 6% with where rates are right now and where the 10-year treasury bond is right now. FHA, we're looking closer to like the higher fours, approaching that 5% mark. And so hopefully, we hope they go down. But next month, the Fed has already said that they're going to raise between 50 to 75 basis points. That won't necessarily shake up rates right away. Last time they did this, it actually made made the 10-year go down slightly, and that's because traders have already baked this in. And if just to give you a little clarity on what I'm talking about, if you guys don't know, the rates are completely tied to the 10-year treasury bond and what traders are doing. So yeah, I mean, hopefully they go back down, come back down to earth, but I wish I knew, and I wish I had a magic ball that would just make them go right back down to 3.5, 3%. But
Right.
let's hope for the best.
I know. We all wish for those COVID rates, but we've bounced back from then. So
hmm
so with either situation happening, how do you think it affects the buyer?
That's a great question. So there's been a couple articles that have come out since the massive rate hikes. One of them I saw recently that from going to about a 3.5% to even just a 5.5% has taken about $50 to $75,000 off of a buyer's purchasing power. So that means, you used to be able to get a $300,000 house. Now that putting you down to a $225,000 range. So it's pretty significant.
Yeah.
And yeah, unfortunately, it's curbing how much home people can afford.
Yeah,
So.
definitely, definitely. And I've had leads where, they're like, oh, we want to buy, but, we want to wait for the rates to go down. So in your opinion, is it better to wait, or do you think they're better off moving forward with the process?
So we actually have a funny saying that we say here, date the rate, marry the house. So house values have historically increased since really beginning of time, except for 2008 when the recession was completely due to housing.
Right.
So we think, homes values are going to continue to increase. So it's great to get in there when you can and
Yeah.
eventually hopefully refinance. There will be another refinance boom, whether it's in 2 years or 5 years. So we say buy now. It's better than paying 100% interest on rent. So you're just burning money. You're not building any equity.
Right.
You could always sell the house in a year, if you really don't like it or can't afford it at that point. So I'd 100% say still buy, call Deja. She'll help you out and go from there.
No, I'm glad you said it because obviously I can't tell my leads or my buyers when to buy. Like I don't have the power to do that. It's all obviously their decision. But with this interview, I'm hoping that, over time, it is going to increase. So I'm glad that you said that.
hmm
So
Of
what was the
course.
thing again?
Date the rate, marry the house.
There we go. So everybody, if you're watching this video, once again,
Date the rate, marry the house.
there
I
we
think
go.
that should be the title of the video.
You know what? I like that. It'll be at the top of the comment section.
Mm.
Okay. And then my fourth question is, there was an article published on CNBC that said that Fannie Mae will fall to an average of 4.5% in 2023. So what do you think? What's your opinion about that?
Hey, it gives me encouragement. It makes me want to come back to work each day. No, I'm just kidding. But again, no one really knows, right?
Right.
No one has a crystal ball. No one's going to know where the economy is, where inflation is in next year. So, I don't necessarily buy into those type of articles. It's all speculation.
Yeah,
So I would say take it with a grain of salt, but hopefully, right? We can only hope.
very smart. Yeah, always take, well, I always, what you don't always believe what you read online, right?
Exactly. I mean, like when I heard about it too, I read it and I was like, wow, this is great. But in the back of my mind, I'm like, they don't know.
Right,
No one knows. It's like the
right,
stock market. It goes up, it goes down, and a lot of outside factors that you don't have any control over. So,
right,
um,
exactly. And we go back to like question three, it's like, well, should you wait or not? And people see those articles and they wait, and then imagine it's double that. So they're just like, well, we waited for nothing. So
right.
yeah, no, I agree. Take it with a grain of salt.
hmm
And then, so my last and final question is, now that the mortgage rate is what it is, are there ways to lower your mortgage rate?
Yes, so you can do something which is called a rate buy down, which seems a lot more confusing than it actually is. So just to give you a very basic example, say the average rate right now is 6%, right? And you want to get down to 5.5% because you have some extra cash to put towards closing costs,
Right.
right? Say that cost a percent, right? Like 1%. They call it like I'll buy a point down.
Mhm.
That would be like a percent of the loan amount. So say the loan amount's $200,000, that would be an extra 2,000 in closing costs.
Okay.
And what we can actually do is do a calculation to say, is this actually worth it? Like, are you going to break even on that investment in 3 or 4 years? And if it's worth it to put an extra 2, 3,000 down towards closing costs, because you're going to break even the next 3 to 4 years, we'll say, if you have the money, you should do it. So
Right.
that is the way to get a lower rate is to buy it down. The other way, there are loans called adjustable rate mortgages,
Yep.
which are fixed for a certain amount of time. So if you have, there, a lot of people refer to them as ARMs, so
Yep.
ARMs. They're still a 30-year term and they're underwritten on a 30-year amortization schedule. But say if they're like a 7-year ARM, then the first 7 years will be fixed. And then the 23 years after that are adjustable. But the idea is you refinance before it adjusts. So those are the two ways to get a lower rate to begin with.
All right. Perfect, Tom. Once again, Tom Waters with Go Rascal.
Mm.
I hope you guys enjoyed this interview, and I hope that, if you do decide to go through me, you will 100% work with Tom, because once again, he's my number one go-to guy. I wouldn't send you to anybody I wouldn't trust with my loans. So I 100% trust Tom
Mhm.
with my loans. So you should trust him with yours. Everyone, I'll put Tom's contact info in the description. I hope you enjoyed this video. If you did like this video, make sure you hit the like button and subscribe to see my next video coming up. I'll see you guys.
Thanks, Deja.
Bye,
Appreciate
Tom.